Hello everyone. I Ankita Bawane, an assistant professor in Tulsiramji Gaikwad Patil College of Engineering and Technology, Nagpur, conducting the presentation for MBA second semester for the academic year 22-23. Welcome to today's presentation on the conceptual framework of the cost accounting. So, in this presentation, we will explore the key concepts that make up this framework. So, without further ado, let's get started. To understand the meaning of cost accounting, it is a very important to understand the conceptual framework of cost accounting. So, these are the two main objectives of our today's presentation. The first one is to provide a comprehensive understanding of the conceptual framework of cost accounting, and the second is to delve into the core concept that underpin the cost accounting practices. Next, we have the terminologies of cost accounting. The first one is cost. The cost is the amount of expenditure incurred or attributed on a given thing. For example, if a manufacturer calculator, the cost of calculator means the material, labor and wages directly required to produce a calculator, and some portion of indirect expenses like office expenses, rent, etc. allocated or apportioned to it. Next, cost accountancy. So, cost accountancy is a science. The cost accountant should possess the systematic knowledge to discharge his responsibility and function. And it is an art, since the cost accountant should have the ability and to scale to apply his knowledge to the various aspects such as the ascertainment of cost, then control of cost, then ascertainment of profitability and marginal costing, etc. Next, we have costing. So costing is a very important term. Costing is a technique and process of ascertainment of cost. It also given information as to what could have been the cost by pointing out and how they have gone wrong with the facilities to correct same. Next, cost accounting. So cost accounting in a simple language is the accumulation, classification, analysis and interpretation of cost data for ascertainment of cost, then operational planning and control and for decision making. Next, cost control. So it is exercised through a number of techniques such as the standard costing and budgetary control. Standard costing is the system to control the cost of each unit through predetermined cost. Its comparison with actual cost and analysis of variance together with their causes. So the cost control is defined as the guidance and regulation by executive action of cost of operating on undertaking. Next, we have cost audit. So cost audit means the verification of cost account and a check on the adherence to the cost accounting plan. It is an independent expert examination of the cost account of different output of an undertaking. Next, comparison between financial accounting and cost accounting. So in first column we have given the financial accounting information, and in second column we have given the cost accounting information. So the first one is financial accounting. So this related to all transaction of an organization. But cost accounting is related to particular product or service. Next, actual financial transactions are recorded. Here, both actual and estimated figure are considered. Next, financial results are published and are submitted to various government revenue department. Costing information is generally only for the management and it is not published as such. Last, maintenance of books of accounts, audit, etc. are compulsory. But under cost accounting, the cost account are kept voluntarily. However, for a certain manufacturing company, it is a mandatory. Next, we have methods of costing. Different method of costing are required for various type of industry. Some industries produce only one product like a bricks. Some industries produce one product but it may be assemble various small item like a scooter, car, etc. There may be industries producing single product but may involve distinct processes like a oil extraction industry. Therefore, it is necessary to select a proper method of costing depending upon the activity of an industry. So, the first one is job costing. So, in this method, the costs are accumulated for each specific job, project, or work order separately. Each job, uh, each job is treated as separate cost unit. In case of motor garage, repair of each car is a separate job. Or in case of printing press, each printing order is a separate job. Next, contract costing. A contract is a big job considering the cost involved and the time involved in completing the same. Each contract is a distinct from other contract like the job. This method is used in house building, plant installation, shipbuilding. Separate books for costing are not necessary. From financial book costing information can be obtained. Next, batch costing. A batch represents a group of similar products. For example, the bicycle factory may produce 10,000 chain cover at a one time and then take up production of other item like a handle, chains, spoke, etc. So when the supply of any item is exhausted, again the same product is produced in next batches. So hence cost of each batch consisting of say 1000 individual item is ascertained separately. Therefore it is known as batch costing. Next we have unit costing. So when the unit produced are identical and a production of only one product is done in a large number, unit costing method is applied. For example, brick manufacturing, breweries, etc. The cost of each unit is determined by dividing the total cost incurred by the total number of units produced. Next we have the process costing. When manufacturing of product involve distinct stages or processes, this method of costing is employed. For example, in textile industry, the distinct processes are spinning, weaving and printing. In oil extracting units, there are three processes: crushing, refining and finishing. So in process industries, make or buy decision are involved before and after each process. Operation costing. When for making an article, many operations are necessary, operation costing method is employed. For example, a chain cover of bicycle is to be manufactured. The steel sheet will be first cut into proper strip, then shape according to design, and then machine, and then polish. So thus different operations are carried out and cost of each operation can be ascertained. Next, operating costing. So this is also known as a service costing. The undertaking rendering service use this method of costing. The transport company does not produce any article but it carry goods and passenger. Then next, composite or multiple costing. So if it is not possible to ascertain the cost of a product by using any one of the method, so this method is followed. And this method is a combination of two or more methods. It is followed when a final product consists of number of separate parts, for example bicycle, motor, car. Next, elements of cost. So elements of cost mean the primary classification of cost according to the factor upon which the expenditure is incurred, viz. The material cost, wages and expenses. So the first one is material cost. Material cost can be divided into direct and indirect. First of all, direct material. The material which directly enter the product and form a part of a finished product are called as direct material. They can be easily identified in the product. So for example, wood in a furniture, paper in a book, etc. Next, indirect material. So material which are not form a part of a finished product and may not be identified separately in a finished product are called as indirect material. For example, store and stationery is included under this category. Next, labor cost. So labor cost may be direct or indirect. So the first one is direct labor. So the wages and salaries paid to the worker and employees who are directly involved in the manufacturing processes are only included here. For example, wages paid to the machine operator is called as direct labor. Next, indirect labor. So wages paid to the worker who are not directly involved in the manufacturing processes are called indirect labor. Wages paid to the foreman, storekeeper, then ward and ward staff, repair and maintenance staff are example of indirect labor. Next is other expenses. Other expenses may be indirect or indirect. So first of all, we discuss about the other direct expenses. The expenditure which are conveniently allocated to a particular job or a product other than direct material and direct labor are called direct expenses or charges. For example, carriage of raw material, royalty paid on the basis of quantity of goods, hire of special equipment for production, cost of defective work, etc. Next, other indirect expenses. So, other indirect expenses is categorized in four parts. The first one is a factory overhead. Those indirect expenses incurred in factory are called work overhead or factory overhead. This include the expenses incurred inside factory like rate and insurance, transport, wages to repair gangs, work manager salary, workers canteen and welfare expenses. Next, office and administrative expenses or overhead. So those indirect expenses incurred in office are termed as office overhead. And these expenses include the salary of office staff, office rent, lighting, printing and stationery, account department expenses, director fees, etc. Next, selling and distribution expenses. The selling expenses include all indirect material, all indirect expenses, all indirect labor incurred for promotion of sale and relating to customer. For example, salaries and commission of sales manager, advertising, samples, etc. While distribution expenses include all indirect material, indirect labor, and indirect expenses incurring handling the product from the time it is completed in the factory until it reaches its destination. For example, cost of packing and forwarding. Next, item excluded from cost accounts. So these are the item excluded from the cost account as they do not affect the cost of production. The first one is financial matter. Interest on loan and dividend on share paid or received, rent receivable, cash discount received or paid, profit or loss on sale of investment or fixed asset, expenses for rising capital, etc., not included in cost account. Next, profit appropriation like a income tax, wealth tax, transfer to reserve, charitable donation, then excess depreciation are excluded from cost accounts. Next, abnormal expenditure. The cost of abnormal wastage of material by theft, fire, etc., abnormal idle time, cost of rectification of defective work, exceptional bad debt, fine and penalties for infringement of law, etc., not included under cost accounts. Last, conclusion. So the throughout the session, the conceptual framework of cost accounting serve as the backbone of effective cost management and decision making. It also provides a structural approach to categorizing, analyzing, and utilizing cost information for various purposes. That's all from my side. Thank you so much.